I like how you actually help people to overcome analysis paralysis, right? I know everything, but I know nothing.
You want to invest in a market that is growing. What's the product of this business? You have units for rent, so you need people living in those units. The more people are coming into this city, that's what happens. Offer and demand, right? The demand goes higher, prices go up. That's the trick. That's what you're looking for.
Hello everyone and welcome back to The Path of Progress. I'm your host Alex Kononov, and today's guest has one of the most powerful transformation stories I've ever come across. From being kidnapped at the gunpoint in South America to building a 50 million real estate portfolio here in the US. Joining me is Hans Seelinger, a Florida-based multifamily investor with assets across markets like Texas and Nevada and even Florida. Hans built all of his in just a few years, starting from scratch after moving to Miami and reinventing his life. Hans, welcome to the show.
Alex, thank you so much for having me. It's a pleasure to be here.
It's my pleasure to have you here. Hans, honestly, your story is so remarkable. Can you take us back to the moment that changed everything and pushed you to leave South America?
Well, yes. As you said at the beginning, I changed basically my life. I started in the corporate world. So I started working for a big sports brand and started in the warehouse, ended up being general manager of the company. But in South America, specifically in Venezuela, which is where I was born and raised, situation got a little bit tricky. I don't know if you heard it in the news, but the economy there kind of collapsed. And with that, insecurity got a little bit crazy. And it was kidnapping was a very common thing that was happening a lot. And I was just one more of the statistics. And I can tell you, when I got kidnapped with my wife, it was one of the most unpleasant experiences of my life. Of course, I'm here. We survived. But that was something where I said, this is not a place where I want to bring up my kids. And then I decided to move here into the US because I started investing in real estate back in 2008. I had a place to stay here and started renting some other properties. And that's how I started. But I went from being general manager to having nothing. And with the collapse of the country, basically, my income also collapsed at that time, right? So that was a big lesson, Alex, for me. And I think that it's super important for everyone that's listening here. Don't ever rely on a single source of income, especially not on a U2 or a job. You always have to have multiple sources of income if you want to actually have some security and financial security in your life.
Your story is like watching a movie, action movies. You won't even believe it's happening back here in the US, and you're like, okay, this is something that may be reality somewhere. But seeing someone and hearing the story firsthand from experiences, this is something different. So listen, by being general manager, I know you managed about 200 plus people, but had to start over delivering balloons in Miami. What helped you to stay focused and, keep your face up and rebuild from the ground up?
So I think that's one of the toughest things that could happen, right? When in your 40s, basically you have to start all over again. And that was for me one of the biggest challenges, right? Because it really hurts your everything when you start from scratch in a company in the warehouse and you climb the corporate ladder and you accomplish something and you have to start from zero. That goes into your manhood. It goes into your questioning if you're actually capable of doing something. And my wife actually started doing that balloon company and I became the delivery boy. So it was very tough times, I can tell you that. But what I take out of that is what helped me stay focused. I have to say my wife was a very important piece because she believed in me and she said, you know what, you made it once, right? Why are you not going to make it again, right? Let's just, shake the dust out of your body and your shoes and come on, pick yourself up and you can do something, figure something out, right? And I'm also a man of faith. So I do believe that there was some divine intervention giving me some strength and focus saying, Hans, you have to stay focused. You were made to do something great. You're not going to stay delivering balloons. This is just a phase. I started asking, I think, the right questions. It's like, instead of blaming or starting to whine about the situation, I took ownership of this is what I got to do. I read a lot of books. I have to tell you, in that time, I read some books. I listened to some important influencers. I would say Tony Robbins, Jim Rohn, those people, they really helped me go through that phase of changing your mindset and saying, you have to go for it. You have to stand up. You can do it. Anyone can do it. So yeah, that's basically something that helped me stay focused was listening to the right type of people. And I think this is super important for anyone who's listening here, regardless of where you are in your journey. Put the right stuff in your mind. Don't let people put you into, yeah, poor of you. Yeah, situation was rough. Yeah, I understand. Get that out of your system. Say, I'm going to do it. Put yourself on some goals and say, do it until you make it. And I think that's what really helped me go through is I had a plan, I had a vision of because of the rentals that I had, Alex, I was receiving a little income from my rental properties. And I said, this is the smartest way of getting paid. How do I get more of that? And of course, real estate is a thing like, hey, you need money to do that. That was my thought. Like, yeah, how can I be a real estate investor with no money? But the reality is I learned basically that you don't need money to make money. And that's from a great book, Rich Dad, Poor Dad, from Robert Kiyosaki. He says you don't need money to make money. When I first read that, Alex, I said, yeah, easy for you to say. You have a ton of it.
Right. I
But the
like what you
reality
said.
is you don't. You have to start using your brain, what I call now the green matter, right? You use your brain to come up with an idea to generate money and to come up with a business plan to generate an idea that can attract investors that can then fund any ideas you have. So you really don't need money to make money. You just need to learn how to think correctly.
We will come back to that topic. I think it's very interesting to unwind. But let's rewind a little bit before that. And I like what you said. It's about staying focused and taking action. So it was daily action and staying focused on your trajectory, and you made it happen. But let's go a little bit back. While you were out of United States, why did you decide to invest in the United States? What was the logic behind it, and how did you do it out of country?
Yes, that's an amazing question. Basically, my country, Venezuela, had the highest inflation of the world. So every time I was receiving my paycheck, my money was worth less every minute that I had that money in my hands. So because that was happening so rapidly, my sister was actually living here in the US and she said like, there's some apartments that they're selling or some condos they're selling in the building I'm living, right? And a thing called a short sale. And I was like, what's a short sale? I have no idea what that is. Right. And some foreclosures. And it was in the middle of the whole burst of the real estate bubble. Right. So I came in the perfect timing. I have to tell you that. Right. But there was nothing about me being bright about that. That was just coincidence that I came into that time. But it was that. So my sister actually made a little connection there. And she said, I can put you in contact with someone who can help you if you want to buy something. And I started buying some properties in the short sales and foreclosures. Right. I had no idea that as a foreigner, I could actually buy some properties using leverage or using loans. So I bought those properties cash at that time. But the reasoning behind it was I want to put my money into a place where it's safe, right? It has some stability. And I mean, United States of America is famous for being a very stable country, and especially in what regards to real estate. And the other thing was I knew if I kept the money in a bank account, I would spend it. So I said, let me put it into something that will actually appreciate over time and that I don't have it so liquid. So I don't have that itch in my hands of buying a nice car or, going on vacation, but actually preserving what I actually had created. So that was the main reasoning of real estate. And that's still for me today, the main reason why I love investing in real estate is because of the appreciation and because it's an asset that can actually pay me while I'm holding it, right? So that for me just is a no-brainer.
It just makes sense. Do you still have that houses?
Yes, I sold some of the condos and I still own some condos here in Florida, which is where I started. Yes.
So what was your next step after you went to America? You started working, hustling your way through all this mess, and you learned about this multifamily space, right? So what was your first multifamily property that you bought?
So the transition, I'm going to walk you a little bit through the transition so some of the people who are listening here can learn it and say, you don't have to do it this way. You don't have to do it the way I did it. In my mind, first, I started buying the properties with the money I had, right? I had some savings, so I bought some properties. I bought them cash because I didn't know I could actually use a lender or that I could get financing, right? That didn't even cross my mind that as a foreigner, I can do that. When I learned a little bit about that, then I started buying some other properties, and I learned about multifamily, and it was like my mind was blown, like, whoa, you can buy the whole building with all the tenants and with all the units? Because in my mind, it was you can only buy one at the time, right? And I said, this is awesome. So I took a leap of faith, took some education, right? And bought a 12-plex in Miami. So that was my first multifamily. But what I did is I took all the money that I had saved, and I actually made a joint venture with some family members. And I said, guys, we need to do this. This is going to be an amazing business. Let's buy this multifamily. So we bought it, and it was great. But I ran out of money. That was the end. So the next thing that I did was, let me do some wholesaling, right? Let me learn how to do that, which is basically where you find a property and you offer something to a motivated seller, and then the day of closing, you have to have a buyer already, right? So you say you don't have the money, and you basically make some spreads by connecting some dots. It was hard. It was hard. I got to tell you, wholesaling is not for me. It was not my thing. So because my thought was I needed to have money to buy more properties, right? So I did it for a while. I made some money, but it wasn't my thing.
Wholesaling is a very specific skill set. Is you have it or not, and you can attain it. You can work your way through it. You can go through experience, but it's not an easy route. That's for sure. Hold on, before you jump to wholesaling after what you did after, go back to this 12th unit. What was the strategy? Was it a value add property? Was it long term, or you try to do short term rentals there?
No, it was long term. My strategy on that was actually I wanted this to become one of my first legacy properties. I wanted to buy this property to hold it for ever, right? So that was my initial thought. So yes, it was a value add. The whole point was buying the property and start renovating some of the units so I could increase the rents and then increase the value, right? That was my whole point, because at the end of the day, what for me made the difference in multifamily, I think this is super important, is multifamily is not valued like the rest of real estate, right? It's not valued by comps. It's actually valued by the income, like a business. It's a business. So if you can increase the income, you can control the value of the property. So that was my mindset. I said, I have to buy this property. I'm going to increase the rents. I'm going to have some good cash flow, right? And then if I have this property at a higher value, I can either refinance it, right? And take the money out and buy another property, or if I want to sell it, I can sell it. So that was my initial strategy when I bought that one.
But let give us a formula. How do you calculate evaluation for multifamily?
So this is awesome. I think this is super important to understand. Let's just say you have a 100-unit apartment building, right? To make math very easy. If you increase rents by $200 on this 100-unit apartment building, right? That's 100 units times 200. That's $20,000 extra income a month on this property, right? You multiply that by 12, that's $240,000 extra income a year. So if you divide that by the cap rate, right, which is the cap rate is a function of the price of the property and its NOI, the NOI meaning net operating income. And that sounds very fancy. It's just basically on any business, you have money coming in and you have some expenses, taxes, insurance, and whatever other expenses you have to maintain the property. Whatever is left, so income minus expenses, that's your NOI, your net operating income, right? So if you're able to increase that and you divide it by the cap rate of the market, it will give you the valuation, right? So $240,000 extra income on a 100-unit property, that's $4 million in extra valuation. That's how much value you just added. That's why multifamily is such a great space to invest, right?
Right, and then you only touch on one piece, right? Just increasing your income, but you also can decrease expenses. Some properties are poorly run, so they had 50-60% expense ratio. But if you lower down to 40, now you get a big delta. So now you're increasing your delta for NOI getting bigger, and you just better valuation. And what you just said on the difference, just increase. This is, guys, to give you an idea how much of a value you can create. It's a value add project, how much value you can create by doing just the basic rental increase on the property. Because most of the properties, especially smaller size, they run by mom and pop, and they don't run efficiently. They don't increase the rents, and they have too much expenses. They have deferred capital expenditures. And now you're coming in, you're fixing the property, making it less expensive to run. and you also get those rents to market rent, and people usually okay to increase, right? Because you renovated a unit, you have nice, clean, beautiful housing, some amenities, and people just okay to pay more. This is normal. And now you get your higher valuation, you got your equity in the building, and now you can get some strategy. And Hans, tell us about exit strategies. What are options after you create this value? What can we do with it?
Yes, it depends on what your original strategy is at the beginning. One of the things that I like to say is you have to think like a CEO, right? The CEO, what they do, any CEO of any company, right? Their role is to increase the income, right? How do they do that? They have to understand what's going on in their business, right? So you really need to understand what's happening in this property to understand what's the opportunity, as you just said. Maybe it's running it more efficiently. Maybe you have to, just check out the expenses. Maybe they're running it with too many expenses. You can reduce them. Or maybe you can increase rents, or maybe it's a combination of both, right? But then your strategy of the exit is going to depend how you're buying this property, right? Are you buying this by yourself, right? So you want to hold it forever? Are you buying this with some investors? Do you want to buy those investors out at some point? Or are you just doing this as a syndication, which is basically you pool a bunch of investors, right? And you get your sweat equity in, right? And then you want to sell the property after you reach certain valuation. Now, on the bigger deals that I'm doing the third part, right? Which is I am buying a property, and then with my analysis as a CEO, right? Understanding what's going on, what's the opportunity. And then when I recognize the opportunity, I come up with the strategy, a business plan, right, on how to execute it. Maybe it's, the owner has owned it for 15 years. They haven't renovated on any of the units. So we can put, I don't know, $8,000 to $10,000 into those units, increase rents by $200, $300, right, and increase that valuation. And then in 4 or 5 years, I decide to exit, right? I can sell the property, pay my investors back, right, their money, and I can make also some money because we're going to split some of these returns on a syndication level. But you can also refi, and then you buy your investors out and you keep the property for yourself. So those are different options that you have when you're playing this game of real estate.
Let's unwide it a little bit more. So this call structure usually syndication, right? In those syndications, there is two buckets. Tell us a little bit more about what an investor actually means and what roles and responsibilities on that bucket, and what actually is your role and your team in that.
Absolutely. So when you are thinking like a CEO, right? When I say a CEO is going to understand what's happening with their business, come up with a strategy, and then put a team together to execute on that strategy. That's what a CEO does, right? You don't see the CEO working on the machines or opening the gate in the morning in the business, right? They're using their brain. They're thinking strategies. You're going to do the same thing. So now that you identified a potential opportunity to make money, right? You found a property, you analyzed what's going on, then you came up with a strategy with this business plan, right? Then you put your team together. How are you going to put this team together? So on a syndication, basically what you will do is you're going to have two sides. One side is going to be the investors, and the other side is going to be the managers. So the investors are called LPs or limited partners, and the managers are called GP, general partners. So why is this important? Because there's this group, which is you who are finding the property, who are finding the deal, analyzing, coming up with that strategy, that what you're doing with that is you're creating an opportunity to make money, and you're using your sweat equity, your green matter, right, to create this opportunity. So let's just have this example, a $10 million deal, right? So we have to buy this $10 million deal. That's the opportunity that you found. It's a 100-unit apartment building. And you're going to find a lender who's going to give you a loan for $7 million, right? You have to put a down payment of 30%. That's $3 million. And then you have a budget for renovations. There's going to be closing costs. To make math easy, let's just say that's another $1 million. So you need to find $4 million to get this deal closed. All right. If you don't have the $4 million, what do? You bring in investors. You present this idea to investors, and these investors, you'll explain to them your business plan. Hey, this property, the owner has owned it for 15 years. They haven't renovated any units in that time. Rents are below market. The market is at $1,200 for a one-bedroom apartment unit, and they have it at $800. We have an opportunity to make $400 here if we renovate the units. You explain to them the opportunity, and basically the investors are going to be very willingly to invest in your deal because typically you're going to promise them to double their money in 5 to 6 years. That's the typical returns. So for them, it's passive income. They don't have to do anything. They're not landlords, and you can take 50,000 here, 100,000 there, 150 here, as many investors as you need until you have the $4 million. So how much money did you put in?
4 million.
You didn't put any, right? Or you can do it without putting. I would always advise, if you have money, put some money in it. But if you don't, hey, that's it. So those people who put that money, those are the limited partners. But because you took the time to find the deal, create the opportunity, find the lender, create the whole team to manage this opportunity, right? You are going to get also paid. So we're going to split this deal typically on a syndication, 70% for the investors, 30% for you and your team. So that means by using your green matter, you just got yourself a piece of a $10 million deal without having to use any of your own money, without having to use your credit score, without having to use any of that. You just had to use your brain to get there. Does this make sense?
Yeah, for sure. And what's important also, there's so many roles and different responsibilities in the general partner bucket, but it also is a liability on general partner bucket because they take on the loan. And usually it's not recourse loan, but we know that it's usually, it can be not the case. We don't know. It depends on situation and all the dynamics of the deal. But limited partners, the investors, they don't have that liability. They just an investor. And the passive investors, they don't do anything. They get their quarterly, monthly reports from the general partners investor relationship, and they just sleep at home well if general partner is correct on their projections and doing a real good job, right?
Correct. And that, you hit the nail on the head. This is the most important piece. How do you make those decisions? How are you actually making those projections? And the biggest skill, what I learned, right, that put me in the position to have a portfolio of $50 million is because I learned how to make those projections, is to be conservative, to really understand how to say, this is where the property is currently at, and how are we going to take it to that next level? How much time is it going to take? How much money do we need in order to execute that? And then put a lot of cushion, because things will always take longer than you expect and will cost more than what you projected. Always. There's no exception to that.
And
so you always have to have some cushion.
And when you say there's no money in the deal from general partners, it's usually not the case. Usually general partners has some skin in the game. That's what it calls. They still put 50, 100,000, 200, 500,000, depends on the deal, depends on the size and investor capabilities. But there usually some skin in the game. So they invested as well money as not only taking investors' money, but they also put in their own hard-earned money into the deal to prove that they actually believe in the deal and they can make it happen.
There's several ways of doing that, because I've had this question, Alex. That's a good point, right? Me personally, I would not invest in a deal where the general partners have not put any money in it, because they don't have any skin in the game. So when you create your team, there's going to be different roles in the team, but everybody needs to be very familiar with the business plan, which is called the underwriting. That's what opens up all these possibilities, right? And there's some people going to help you bring in the capital. There's some people who are going to help you manage the asset, right? You're going to have someone called a sponsor, who is basically the person who has done this many times before, right? Has the experience, because you don't want to buy a 100-unit apartment building with zero experience. You want to have someone by your side who's done this before, and not just once, but many times, right? So that's called a sponsor or a key principal. So that person's also going to be one of your partners, and they're very likely also going to put some skin on the game. But the way you get paid in this deal, there's also a way where you can actually reinvest that into your own deal, because you're not only splitting this deal 70-30. For finding the deal and putting all the work together, you're going to get paid an acquisition fee. That acquisition fee could be anywhere between 2 and 5% of the purchase price. So we go back to that example of that $10 million deal. That acquisition fee could be anywhere between $200,000 and $500,000. So you're going to get a piece of that, right? And that piece you can reinvest in your deal.
Also, you had a lot of costs getting just into the deal, right? Going through the diligence, just getting locking the property, walking the property, paying all the subcontractors to understand what's going on that said property. Can you walk us through those costs and this due diligence process? How
Yeah.
costly it is usually to run it? Because usually when acquisition fee is actually, it's not just to put money in your pocket but you work like 6 months usually on deal, 4 months to 6 months to get this deal and to get this to actually closing table. So it's not just, hey, I found a deal, let's close it tomorrow. It's a
No,
long
there's a
process.
process to it. Yes. So one of the things, yes, there are some upfront costs, but you have to look at this in different stages. At the beginning, there's no cost, right? When you are the first stage is when you're looking for the deals and you're analyzing those deals. You have to think of it like your CEO, right? Like you have these consultants, you walk into your conference room, right? You're well dressed and you go walk there, and you have a lot of people sitting there. You're going to use a lot of people that are actually going to help you in that initial phase to determine if this is a good deal or not. So you're going to have the lender, right? They're not going to charge you to give you a quote, right? The insurance broker. You're going to talk to the property management company. That's a huge one because property management companies, they have a footprint. They are managing properties as we speak in the market that you are interested in. Same type of properties. They can give you a lot of feedback. You want to listen to what they have to say, right? So all that initial due diligence or creation of that business plan requires zero expenses. Hey, if, for example, I'm out of state, I don't have to fly to every property that I'm actually looking at. I use the property management company to be my boots on the ground and just tell me, hey, I'm looking at this deal in this area of town. What do you think? Do you have someone who can just go real quick and give us some feedback? That's all for free. They do that, but you have to create the relationship. So that initial piece, until you basically submit your offer, you have spent zero money. The only thing you've done is used your brain. Now let's just say that your offer got accepted, right? And hey, again, the offer is a non-binding document, right? It's a letter of intent. It's just saying, hey, I have the intent of buying this at this set price. It has zero legal commitment. You're not obligated to anything. You're just saying, this is what I would like to buy this for. Now, if your offer gets accepted, now that's the moment where you really go a little bit deeper and you decide, okay, is this the deal I want to go after or not? Because now you're going to be incurring costs. What are going to be those costs? You're going to need an attorney to go over the purchase and sale agreement, right? And you're going to pay them regardless if you close or not, because you're paying them to create that document, right? So they don't care if you close or you don't close. So you have to have that. You will have to have your inspection costs, right? So what I would do is before I go and do any expenses, I will do a financial due diligence, right? I will ask the seller, give me all the documents so I make sure that whatever you told me, right, is actually true, right? So I want to do my financial due diligence. And once that is done, now money starts flowing. Now we have to go to the property and we have to do the due diligence, right? And that due diligence, you'll have an inspector, you'll have your property management company beside you, right, to do the roofs. Very similar to what you do when you buy your own house, right? You'll do a roof inspection, sewer lines inspection, electrical, plumbing, right? They're going to walk around the property to see any foundation issues, right? The typical thing is just on steroids. Instead of being for one apartment or for one house, it's going to be for 100 units, right? So it's a little bit more, but you only incur into those costs after you get the offer accepted. And that's basically the moment where you say, I'm committed to this. And only if I really find out something really nasty, I'm going to pull out, right? Now you're committed. And yes, you're going to have that upfront costs, right? But then at the moment you close, those are part of the closing costs. You get reimbursed for all that. So yeah, so that's how that works.
So how do you manage those properties out of state? Do you have a partner on each deal that boots on the ground on that area?
Yeah, the partner is called the property management company. They're the ones who have a footprint in that market. So the way you manage those is you have a very, very clear reporting system, right? And you have regular meetings with them. I have a meeting once a week with my property management company where we go over something that's called the MMR, which is a Monday morning report. So I'm going to have that today with a bunch of my properties. So basically what we go is we go over where's the occupancy, what has happened this week, how many leads did come in, how many units did we rent, how many are we going to take out, what's happening with collections, right? You're running a business, right? So that's how you run those businesses out of state. And then every now and then, as a good business owner, you just take a trip and you just see for yourself what's going on with the property, and you stay there for a couple of days and you make sure that you help achieve any goals that you're looking to achieve. But that's
So you,
basically how you do it.
so your system, your process is pretty much hands off. Did you have any instances when you had to intervene and like put your foot down with property manager? No, we have to renovate 5 units, not 3 units. Guys, speed up, do something.
You're managing a business, you're working with people, always. That's always going to happen, especially at the beginning, right? When you're getting to know each other, right? You have to set clear expectations, but also help. This is not a business where you're looking at the property management company and you're trying to be like the boss where you're just giving orders. It's your property. You want to make sure that this is working correctly. So you're working alongside your property management company and you're giving them support to achieve their goals. But sometimes you have to fire a property management company. Sometimes they're not achieving the goals. Sometimes they're not doing what it's supposed to be done, or they're taking too long, or they're spending too much money. Then as an executive decision, right, you have to say, give you one chance, give you two chances. Well, now 4 months have passed, 3 months have passed. We haven't seen any changes. I think it's time for a change.
That's why we have a balance, right? We have property manager and we have asset manager. And you as asset manager, you have to overrule sometimes and you have to oversee what property manager do and make sure everyone on the track, everyone's on point, and the property is progressing to the right direction.
And here's key. That's why it's so important when I'm saying you're building your team, right? Make sure your team is not a relay race where some people because I see that sometimes in syndications where they say, I'm going to be the broker's relations person. I'm going to be the underwriter. That person's going to do this, that person. And then they just pass the baton. This is a business partnership. You want to make sure all your partners are going to be there together with you during the good and the bad times. And that everyone is familiar with the business plan. Everybody understands how the business is running. And yes, some people may have some more skills than others in certain areas, but everybody needs to be involved in this. But then the other piece is it's super important to have a good sponsor, someone that actually has done this before, because they're the ones who are going to tell you this property management company, what they're doing, that's not normal. That's not okay. We have to tell them to do this or do that. Right. So that's why when you're getting started, I was afraid of, hey, I don't know how to run this business. Even though I've run 200 plus people before, that was a different business than this business in a different country, right? So I was not familiar with all the rules, regulations, what you can and you can't do, right? So that's why it's super important you have a good sponsor on your side.
An experienced sponsor. And right now, how you talk about it, I can feel that you experienced and you talking about it from your own past instances. So Hans, how did you learn about all of this stuff? I understand experience come from making actual deals, from taking action, but before taking action on a large multifamily deal, how did you learn how to underwrite and go after them? Because 12 unit is also a commercial deal, but it's a big difference going from 12 unit and 100, more like a mentality switch, right? Because the numbers are bigger. How did you overcome that? How did you learn to be comfortable with those numbers?
So it's super normal to be uncomfortable with all this. I can tell you my first call with a broker went more or less like this. I dialed the number full of self-security. The guy answered and nothing came out of my mouth. I panicked and I hung up. So that was my first call. So anybody who's trying to tell you like, yeah, you come in with the mindset and you can do this and the first call goes great. Well, it wasn't my case. Panic on the first phone call, imposter syndrome. Like, who am I kidding here? All right. I'm trying to buy this. My first deal that I did as a syndication was a $7.5 million deal, 100 units. I was like, who am I kidding here? Right. I'm calling here about, $8 million, $10 million deals, and I'm delivering balloons, for crying out loud. Right. So yes. So that definitely is a mentality shift, right? You have to have that self discipline of saying, yeah, I know the first times it's going to be a little bit awkward, right? But then you build the muscle. I think that it all comes to do it, right? I always say perfection is the enemy of execution, right? If you want to have everything lined out until you start acting, you're never going to act, right? But I'm a big believer in mentors, coaches, that people that actually have done and achieved what I want to achieve. Those are the people that I seek as my mentors and coaches. So I enrolled in several coaching programs to learn how to do this, right? Because you're trying to play a game where you're buying multi-million dollar businesses, right? So you really need to be, and you're looking also to have investors invest into those deals. So my way of thinking is, if you want someone else to invest in you or in your deals, you have to be willing to invest in yourself first, right? So I took well, it was a bold move, right? I paid for a very expensive education to learn about how to do multifamily, right? With one of the greatest coaches, right? Who also taught very important, influential people. And in that coaching program, what I did is I learned a lot of people, and they say your network is your net worth. And I truly believe that, right? More than the knowledge that I got from that, it was the ability to network with these sponsors, with these high net worth individuals who had already accomplished and bought thousands of units. So I started having relationships with them. And then I had a conversation with one of them and started, showing them what I was doing. This is the underwriting I'm doing. And you got to be able to have what I call an empty cup, right? Be willing to have someone explain to you how things are done, not coming from the point like, I know everything. I came with the attitude of, I don't know anything. And I started networking with one of the sponsors, and he basically told me, I see you are a great guy. I see you understand numbers very well. You have no clue what you're doing. And I said, okay. And then he explained to me how the business really works, how the underwriting is the central piece of this business, right? That is actually allowing you to have a piece of a multi-million dollar business using your brain. It is the fact that you can analyze the deals, come up with a strategy, and then present that strategy to investors and to a sponsor. It's not just, I talked to a broker and I have a deal. That's not enough. Or I took some numbers and I put them onto a spreadsheet. That's not enough. It's the business plan where the money is made. And then he explained that to me, and he put me in contact with one of his underwriters, which then later I found out she was the underwriter for like 9 or 10 of the biggest sponsors in the industry. And I said, you have to teach me. We came to an arrangement. She taught me. 3 months later, closed my first 100 units. So wow. If you want to be able to do this, you have to be willing to invest in yourself, but invest with the people who have actually done this. Or even better, there's a lot of people who have done this, but did this 10 years ago. The market today is completely different than 10 years ago. You want to do this with people who are doing it now, successfully now.
And I love what you said about your network is your net worth. And this space, real estate investing, is exceptional, right? I didn't see it in business. It's not really the same there. And when people operate some business and they don't share as much their knowledge and their insights. But in real estate, people so open-minded, people so open to connecting and share, pass the torch to someone else, that they usually, it doesn't matter how big they are, 1,000 units, 5,000 units, 300, or just a beginner, they're still open to talk about their experience and help elevate you to the next game. And what's also important, in this game, in real estate investing, there's always someone bigger than you. You can always find a bigger investor, right? Either you have 5 units, but also the smaller one. So you're always somewhere on the ladder. There is no limit pretty much. And even if you just closed your couple multifamily, like 5-unit deals, you have 10 units, you think, oh, I'm too small. But there's people who didn't close any deals, and you possess that knowledge. They need to process to another level. But also this guy, 10 units, he's looking for the guy who has 50 units, and so on and so forth. There's always someone below you who would love to hear this information, and there's always upper that will help you to propel to another level, right?
Absolutely. And the reality is, one of the things I really like about real estate is that, as you said, in fact, there's not such a thing as competition. There's here you're actually more collaborating. So if you, Alex, find a 100-unit deal, right, and you say, hey, who do I know that has also done this before? And then you call me and you say, hey, Hans, I'm doing this 100-unit deal, right? We need to raise $5 million to get this thing to the finish line. Hey, do you want to collaborate with me? Do you want to be a partner with me on this deal? I'll take a look and I'll say, you know what, Alex, love the deal, love the way you underwrote it. yeah, let's partner on this. I can bring some of my investors to your deal and we can take this deal to the finish line. And of course, now we own it together. So here, it's no such thing like Alex is doing multifamily. So we're competing against each other. There's so many properties out there. The likelihood of you and I looking at the same property in the same market at the same time is so slim. And if even that happens, instead of let's compete, let's join forces. Let's be stronger together. So that's something that's very unusual in regards to any other industry where you like, hey, we're competing to get a share of the market.
And it's interesting, like another analogy, right? Like a swimming pond. Smaller residential units, 1 to 4 units, there's a ton of people buying their first home buyers or buying small residential or site houses or vacation rental. They're trying to hustle their way in the big pond, but there's a ton of people swimming in that. But when you go to a multifamily space, it's a whole different game. And people usually who's active in the space, they love to collaborate, like you said, collaborating with each other and taking down a big animal, like our previous ancestor, like hunting mammals, and they grouped together. They couldn't get them by themselves, but now as a group, we can actually take down this 100 unit. We can take down 500 unit, and sky's the limit. It's just the power of right people collaborating with each other who already done it or who wants to have the right energy and the right mindset to go after it.
Absolutely, absolutely, and that's the only way to grow. Actually, right, is to have those collaborations. Is to be teachable. Is to understand. Be humble enough. Yes, I have a portfolio of $50 million. There's people who have portfolios of billions of dollars, right? And I started with having nothing. So I completely understand what you're saying. I completely relate and say, yes, that's the way you go up. I'm still partnering with people who have much more experience than I do, right? And that's how I'm learning. And I'm also passing what I've known, right, to other people and helping them also get into the space. Because you never know. The only way to grow is to collaborate. You can't do this by yourself. You have to find people who help you up, and everybody's pushing everybody up. Nobody's pushing anyone down here.
For sure. And I want to come back to your course and your educational program later. But for now, we jump right into mindset. I love it. But let's rewind and talk numbers. Your first 100 unit deal, walk us through it. How did you actually found it? How do you close it? And do you still own that property? Give us some more details.
Yes, I actually still own the property. It's in the middle of the business plan. The way it was, this is super important why relationships are so important. You start making phone calls to brokers. Brokers are not paying attention at the beginning because who is this clown calling me here, right? I've never heard about this guy, right? So that's why it's important on your partnerships that you really use the sponsor's experience, right? If you're partnering with someone who has 3,500 units, use that. Say, hey, I'm the acquisitions person on this team that owns 3,500 units. Gives you credibility. Credibility you don't have, right? But the reality is your team members do have. And you're not lying because at the moment of closing, that's the person who's going to take the loan. That's the person who's going to be basically taking the lead, right? So you take advantage of that relationship. But as you start inquiring for deals, you start creating relationships with property management companies, with lenders, with insurance brokers. They're all part of the industry. And in this case, the 100 unit deal, what happened is I started creating relationships with property management company. I was looking at another deal, and this property management company told me, walk away. This is what's happening here, A, B, C, D. And I was like, wow, thank you. Thank you for letting me know. And then they called and say, Hans, but I know about this deal that's coming to market. It's not in the market yet, but I know the broker. Do you want me to make a connection? And I said, yes, of course, make the connection. Imagine how strong that connection comes when a property management company that knows one of the brokers tell you, I want to introduce you an investor that's looking for deals here. Now you're not someone out of the blue calling this broker. I have a connection with this broker before he even put the property in the market. I said, how did you know about this? Said, yeah, so-and-so gave me, oh, yeah, you're the person we got introduced. Yes, I don't have the financials yet. You have to wait a week or two. Said, okay, send me everything once you have it. Sent me the information, submitted an offer, got the deal.
But you got instant credibility from a property manager. So broker wasn't like, who was this guy calling? He's come from property manager. So he's someone in the space. So if someone was referred from an active property manager, and the property manager is a very smart operator. Now he knows that he referred you to this company, to this property, and if you close on it, he might earn the business fair square. I mean, you're trying to wash hands and help each other to grow to another level. And this is a
Absolutely.
very smart approach. And tell me, is he a property manager right now?
Well, they were the property management company. We had to part ways, right? That's
Happens.
sadly, but they didn't perform as we expected. So we had to change the property management company. And that happens, right? And the other thing is when you change the property management company, sometimes it's they didn't have the right team for that property in that area. That doesn't mean I'm not going to work with that property management company in the future in another deal or another place, right? So when you fire a property man, this is something that sounds a little bit weird. Like I fired this property management company. How am I going to hire them for another deal? Depends on where they have the majority of their assets, right? If they don't have a big footprint on that market where you are, then maybe they're not the right property management company. But if they have a big footprint, they really understand what's going on in that other market where you do want to have them managing, they can do a fantastic job. And I've had that situation where I fired them on one property, but kept them on another.
But I like how they didn't burn bridges, right? You
Yeah.
communicated and was kind of mutual disclosure to get, okay, we have to part ways and now move forward. But the most important is that you gave them opportunity to perform on that property. They didn't perform well, it wasn't the right fit for them, but they had that shot and you gave them because they provided you that lead. I think that's very important to mention. Okay, so what is the value at property? Run through the numbers. What is the average rental rate was on that properties? Do you have to renovate those units? And what is the
Yes.
market rate? What is the delta here?
So that property in particular was the whole plan on this one. The owner had owned it for a few years. They actually had put brand new roofs. They had done some of the renovations, but they were self managing it. So there were some inefficiencies on the management side, and rents were below market. So when we inherited the property, we had to do some renovations to some of the units and we started increasing the rents. And we're in the middle of that process right now. Right. So our idea is to hold that property for a few years. And then once we hit our numbers in the rent and in the NOI, we know this is time to sell. And so
Okay,
we give ourselves some time.
I have two follow-up questions. So did you have to negotiate the deal or you just gave them asking price?
Oh, no, we have to negotiate. You always negotiate. And this is super important. Even though we submitted an offer, the seller, he wanted to have multiple offers. We were not the highest offer. That's also sometimes what you have to know how to play. It's not necessarily the highest price that's going to win a deal. It's the assurity of closing. The broker understood Hans as a team. I was communicating with him and he sees this is not Hans buying this deal. He has a team. He already has a property management company in place that I like and trust. He also showed me when he submitted the offer who his team is. So he's backed by someone who has 3,500 units, right? So the broker was looking at my offer. And what I told the broker is my offer, I'm not going to renegotiate you or retrade you. That's what you call it, right? Once you win the deal, you start looking at, nickel and diming, it's what it's called, right? Where you start looking at every little detail to reduce the price. Said, unless we find something that's a surprise for both of us, this is my price. I'm not going to renegotiate. I'm not going to retrade you. If I say 7.5, 7.5 it is, right? And that's something that helped me win the deal as well.
It's a very strong position, right? Because all these fears that the deal will fall apart, that something happened, they tried to retrade, they offer a high price, they tried to retrade and they just walk from the deal like nothing happened. But in your case, you were upfront with them, hey, I want to do that, this is what it's gonna cost me, and this is my offer. You want it, we're gonna get it to the finish line. If not, that's all right too. And how long did it take you to go through? So he collected multiple offers. So did he get back to me? He tried to bring you up on the offer, or
Yes,
he
of
was
course. Yes, and they did. But my initial offer was 7.2, and then my final offer was 7.5. And then as things happen, right, during the diligence, we found something that was a surprise for everyone involved. And we said, we have to talk about this. This is something that was not disclosed. And we found this during the inspections. That's why the inspections is so important. And that inspection saved us $250,000.
Yep, on one of properties that I walked through and we had in the diligence phase, we found sinkholes on the property that weren't disclosed.
Ouch.
And that was ouch. And then we follow up with the city. It was a common sin in that particular area. So we just decided to walk from the deal. But there's the power of due diligence, right? For understanding. You can get your best offer from what you know, but you won't be able to know if something's really wrong going on. You can factor some repairs based on the age and guidance of the seller, but still there's something like maybe there's some damage on the roof, damage on the sidewalls, there was some car accident in the part, and you have to invest extra 50,000, 100,000, who knows, that wasn't disclosed. And this is where you can actually trade and be still good face with seller,
Yeah,
because this is what it is. You've been honest, and that's what happens.
absolutely. Yeah, and once you understand the system, it's just rinse and repeat, right? After I bought that 100 unit, then I got an 80 unit under contract, and during the diligence, we found stuff that we had to pull away, right? Then I got another 111 units, then 122, right? Now I'm under contract on 84 units in Arizona. So it's just one after the other that you start understanding how the system works.
So tell us, how big is a due diligence? How much it costs to do due diligence 100-unit property? And if you have to walk from the deal, what will be the damage?
So if you have to walk from the deal, well, you had to eat that cost, right? You and your partners, whoever, the way you structured your deal, that's how you're going to basically assume the risk of that. But that's why you do a lot of things before you start spending money. You make sure everything is, in my case, I don't move a finger until I do financial due diligence, right? I need to see all the numbers, send me the bank account, send me everything. And I want to make sure that everything you said of this property is actually true by the hard documents, right? After you do that, you're committed, and now let's do it, right? So it's very unlikely that after you committed, you don't perform, right? That's why you have an order to do that. But it depends. It could cost you between $15 to $30 per door to do the whole inspections, right? So that could be $3,000, $5,000, $10,000, depending on how deep you go, right? But typically the extensions for the expenses for the inspections are going to be in that range between, let's say, maximum $50 per unit, right? So if it's a 100-unit apartment building, that's $5,000. That's more or less what you could expect on the initial inspections. And then attorneys, $3,000, $4,000, $5,000, depending on the first side. And then after you're committed, you want to raise, you have to pay your SEC attorneys. And basically then all the closing costs are going to be involved with the lender and all that. Now you're committed. Now it's the point of no return. You got to do it.
Now you can spend more money because now you're okay. You got all the information that you need to move forward with the deal. And now you can.
Yeah,
The diligence is passed. Let's just move forward and let's raise it capital. Let's push
It's
the button.
all about risk mitigation, Alex, right? You will make everything you can to make sure this is a good deal before you start spending money.
So Hans, you scaled pretty rapidly in this space. In just a couple of years, you grow from 0 to 50 million under assets in Texas, Nevada, and Florida. What does your business look like today?
So, well, basically, it's the same as in the beginning, just now with the experience. Right now, I have a team in place. I have a group of people I'm working with that we trust and like each other, that we've done several deals together. My business partner, which actually was one of my mentors, Hitomi Yasuda, she and I, we are partners on all of our deals. So that makes us, with the experience that we have, a good partner to have. So now we have some deals that people are even bringing to us, right? So we look for deals, we submit offers constantly, right? That's something that you'll never stop doing. But sometimes you get invited to a deal. Someone brings you in and said, Hans, I've heard good things about you. I want you to be a partner of mine in my deal, because this is all a business about adding value, right? So if you are someone who can add value, you are someone who can play in this game, right? So, and that's about it. So you start getting invited into other deals, or you find your own deals, and then you have more people who actually want to work with you. That's why you can scale faster. And this is the whole thing. You do the first one where you show that you can do this. And then after that, it's just outperforming anybody, right? If you say you're going to do something, do it.
Power of momentum. You build this credibility, a little momentum. Now you just rolling with it, and you just want to make sure. So why do you focus on this particular markets? And do you invest in some just metro area cities, or you go to tertiary market? Where are you right now looking your business?
So there are several factors that I'm looking at, but the main thing is, as the name of your podcast, you're looking for the path of progress. You want to invest in a market that is growing, population growing, right? Because what's the product of this business? You have units for rent, so you need people living in those units. The more people are coming into this city and you have more or less the same number of apartments, what happens? Offer and demand. So demand goes higher, prices go up. That's the trick. That's what you're looking for. Places where population is growing, where people are actually moving in, not moving out. You want to be in a place where the economy is going up. Why? So people have more purchase power, so you can actually give them a better product. Because yes, there are people who are only looking for price, right? So they don't mind living in a bad place, right? But there's other people who want to have a nice place with nice amenities. Well, they want to have a good property to live in, right? So that's where the upgrades make sense, where you put them a nice kitchen, some nice appliances, right? You have some nice flooring. So those things add value, and people are willing to pay a little bit more for that. So that's why you're looking for any market that has that. And then there's one big factor. Remember, we're living in the United States of America. So that means there's a lot of states that have been united, but each state has their own laws. You want to make sure you're investing in a state that is a landlord-friendly state, where if someone stops paying, you can actually use the law to enforce your rights of having your unit back. So if you're not paying for it, you can't live there. So that's super important, because when you're working in a landlord-friendly state, you can ask someone to leave the property if they're not paying. If you're not in a landlord-friendly state, it's going to take you a while until you can evict someone from a non-paying situation, but you still have to pay the lender. You still have to pay all your expenses, right? So it's a business that you're running, right?
So you're not considering California or New York, right?
I am not.
Very straightforward. Okay, very good. And now, since you have some exposure to those states, are you trying to stay within the cities that you have already properties, or it doesn't matter for you where it is, as long as there's some city and development going on?
I would say that the first thing I would advise to anyone that's starting is focus on one state, because you need to build relationships. Now, depending on, sometimes the opportunities are in another state. Maybe you get invited to another deal. Maybe something happens that makes you see a deal that's out of the state that you were actually initially looking. And that's what has happened to me. My main market has been Texas, but here I am. I have properties in Nevada, and I'm now doing a deal in Tucson, Arizona. Why? Because there are some extraordinary circumstances that have happened where I see there's a specific opportunity for me to be part of this deal or to invest in this deal. So I would say try to stay focused and try to build a portfolio in a city, right, that has all these elements where there's job growth and population growth, and there's a good projection on the economy. Get started there, and then once you get started, then see where the flow takes you.
So before we move on to another part, give us your buy box. What are you buying? Where are you looking right now? And what are your criteria?
Yes, awesome. So I'm looking for anything 80 units and higher. The reason I'm looking for 80 units and higher, I want to have staff in my property. I want to have people there. I want to have a leasing agent in an office taking care of my tenants, right? So that's the reason I like the 80 units and higher. I don't go over 200 units because I think that's a nice space between 80 and 150. I also like properties that have no elevators. I mean, I want a property that's just one ground floor or garden style, maximum 2, maximum 3 stories, pitched roofs. I don't like flat roofs. And I want properties that are 80s and newer, because I don't want to deal with properties that are too old, right? Properties as they age, it's like we as humans, right? It's an old lady, it's going to have a little bit more visits to the doctor, right? So we don't want to go too old.
And when you pick those markets, is it important for you what is household income, population size?
Right? Yeah, of course.
So
Yes.
what are the markets for you?
You want to make sure that, in my case, I like to invest in a place that has at least 100,000 people in the population, because you want to have a pool of tenants. If it's only like 5,000 people, well, those people are recycling there. There's not much opportunity for you to grow there. And so you want to have at least 100,000 people. I like to be close to an airport. That's one of my buying criteria. I don't want to be more than an hour away from an airport. Why? Because I have to go there. So, and if there's not an airport 1 hour away there, why are you investing there? What kind of place is that?
Love it. Okay, let's move on to the next part, your teaching program. and to build wealth. So you know you're passionate about helping others to invest and buy big without investing their own money. What are the key principles behind that approach?
So first of all, I think it's for me, the journey started investing in condos. Then I did wholesaling. Then I started with my own money buying multifamilies, right? If I had known that I didn't have to do any of that and I could have just started using my brain and start buying the big deals, I would have done it, right? It would have given me so much more momentum, right? So one of the things that I like to pay forward is to help others in the journey. There's a lot of people who can do this, right? They're having a job, they're slaves to their job, right? They have the 9 to 5, they don't have any way of creating that financial freedom. And I say anybody can do this. I mean, I was delivering balloons. I have an accent, clearly, right? So I'm not from here. I didn't know anybody in this country. How is it that I was able to make it? So if I was able to make it, anybody can do this, right? So one of my passions is to help people get into the space. And if I can do something to help you gain that financial freedom, if I can do something to help you succeed, that is also a thing that's very fulfilling for me, right? Because yes, the money is great, right? And we all want the money. And I mean, yeah, we can all say like, yeah, money's not the most important thing, but at the end of the day, we all have to pay bills, right? So we want to have that financial freedom, and there's nothing wrong with wanting a lot of money, but also helping others achieve it. That gives you an amazing sensation. So that's why by seeing the struggles of so many people who actually have paid thousands of dollars in their education and not being able to submit any offers, not being able to gain any traction. Because at the end of the day, the game, Alex, is if you're not submitting offers, you're not going to win a deal. There's so many people playing the game and they just are accumulating knowledge, but they have not submitting an offer. They're not pulling the trigger. How are you going to win a deal if you're not submitting any offers, right? You have to. So, and you have to go from that mindset that, yeah, probably I'm not going to win the first one. You have to submit many, right? This is a numbers game, right? So you got to be good at doing it. But if you're not submitting anything, you're stuck. So my goal when I reached out, because a lot of people started reaching out because the same thing you said, Alex, like, Hans, I mean, you're growing. What's going on? You got this 100 unit. Now you won that 80. Now you're on 122. Now you're on 111. What's going on, man? Now you have 84. Hey, what are you doing? I'm doing this for 3 years and I haven't submitted any offers. So I start helping them saying, okay, let me see where you are. What's going on? And I explain to them, the underwriting is the ticket. That's the value you add to this whole equation, which is finding the deal, coming up with the business plan, and then presenting it to the sponsor. So I partner with the person who taught me, which was the underwriter that is the underwriter for like 9 of the biggest sponsors. So every time someone sends a deal to them, she was the one saying yes or no. I call her the gatekeeper, right? So I said, hey, since you already know what the sponsors want and you taught me and I was able to do this so quickly, why don't we actually help people do this, right? Like understand this step by step. So we created our own program, which is called Underwriting to Win, which is basically an accelerator for your success. What we do is we fast forward your success by teaching you step by step how to find the deals, how to analyze the deals, right? How to come up with the strategy, the business plan. And this is the most important piece. That's where most people have the difficulty, right? Coming up with that detailed plan. And then we teach you how to present it to the sponsors, to the brokers, and to the investors. So it's the whole thing. So we put you in a position where you can start submitting offers. And if you start submitting offers, inevitably, at some point, you're going to win a deal. So we've had the fortune to really have helped several people already win their first deal. Not only the first, actually the first, the second deal. We have someone who's already on their third deal. And it's fun to see someone who actually came in a little bit lost and you gave them the right knowledge and you see them succeed and you're like, wow, I was able to be a part of your success. And they pay back you by saying thank you. And I think that's the best thing.
I like how you actually help people to overcome analysis paralysis, right? People get into that zone and like, okay, I know everything, but I know nothing. How do I get it? Because I know it's a good deal, but I know what's the next step. And you actually make them to take this action. And instead of just focusing on growing your own portfolio, which you can simply do, right? You can just stick to what you're doing and it will be fine for the rest of your life. But you're passing the torch and you're helping others to become better version of themselves. and progress to their own path of progress to financial freedom.
Yes,
I love it. So
absolutely.
so Hans, I have last couple of questions for you. Quick hits, lightning round. So whatever first comes to your mind, just let us know. One book or resource that had major impact on your business mindset.
All right, so I will tell you two books that are for me super important. The first one, the Bible, has a lot of good stuff about finances, right? I think that's a great book for someone to actually go deep and understand financial principles. And if you're in real estate and you really want to understand how this game is played, read Rich Dad, Poor Dad. I think that is an amazing book for opening your mind on how the world really works.
It's a Bible for pragmatic people for who like the numbers, right? For real estate investors. This is your first. Everyone who is investing in real estate at one point of their life, at some point of their life, actually read that book. And quadrant, I forgot what the name.
The four quadrants, yes.
Four quadrants, yeah, yes. I
Yes.
started with that book and then Rich Dad Poor Dad. Okay, let's move on. Most important trait a new business leader should develop. And when I say business leader, I mean also real estate, because like you said, CEO running a company is the same in real estate. It's also a business that you have to run. So yeah.
I think the most important skill that you have to have in this business is learning how to do the underwriting. That's what it is. You need to. I know some people don't like numbers, but if you want to become wealthy, you have to understand numbers. There's no way around it. So learn and master how to underwrite, which means find deals and come up with business plans, and then how to build teams. That is the main thing. Be easy to work with. Don't be a complicated person. Don't be a know-it-all. Don't be like everything someone says is no. Empty your cup, get into this business, find people who are further in the journey than you are, and learn from them.
Yep. Love it. Okay, one thing you wish you had known before your first multifamily deal.
I wish I'd known this before.
Large.
I wish I knew this before. I wish I knew how to network properly. And this is super important because you are going to need investors. So when I was in, now I understand why people would pay $10,000 to sit next to the court on a basketball game, or why people would go and pay thousands of dollars to go into a networking event, or pay 20 grand to just become part of a mastermind. What you're doing is you're just surrounding yourself with people who are saying, I'm willing to spend 20 grand on myself so I can have a conversation with you, right? And when you have that mindset where you say, I'm going to invest in myself, right? I had a scarcity mindset, like, oh, I can't pay that. That's so much money. And I want to have a guaranteed return. No, you go and you invest in yourself. You go into masterminds, you go into places, you put yourself into positions where you can network with people who can either become your investors, they can become your mentors, they can become your business partners. There's so many things that can happen, but you have to put yourself in those places. I had to change the people I was surrounding myself with, right? So if I had known this before, I would have surrounded myself with better quality of people. This is not a material thing. It's not, I have to surround myself with rich people. There's a lot of rich people who I want to learn nothing from them. It's people who are actually inspiring for you. And some people may be wealthy in material means. Some people can be wealthy in other things. So, but for me, I think if I would have done this earlier, I would have gained more knowledge in a bigger network before. But now, hey, you can't go back. So now I learned. Now go ahead and do it.
It's in 2020. And it actually helps, your experience helps with networking, right? It gives you extra win to go and discuss those conversations. Okay, and I have one last question for you. If someone wants to connect with you and talk about your mentorship program or even get into deal together, what's the best way to reach you?
So I prepared this. I think this is going to be helpful. I'm going to put it in front of the screen. So you have my email over here. That's my Facebook. That's the Instagram. And that's our website for Underwriting to Win, which is our coaching program. Basically, it's a hands-on, one-on-one experience. We're going to basically walk you through the hand and we're going to throw you into the water, basically, but we're going to be next to you, right? We're basically going to put you in a position where you have to submit offers. And we're going to do that 30 to 45 days. That's what we do. And so here we go. Again, these are all the contact information.
Yep. And what everyone should say, challenge accepted, right? And get to the challenge with you 30 to 45 days and get their first deal. We got
Awesome.
it. Hans, Thank you so much. Your story is one of the resilience, clarity, and unstoppable action. And I'm honored you shared it with us today. Thank you.
Thank you so much, Alex, for having me. I really appreciate it. I love what you're doing. Thank you for also putting this so people can hear stories and get motivated. And I hope I was able to add some value. And if someone actually felt inspired by this and say, I can do it, you can reach out via Facebook or you can send us an email. I'm always happy to share stories and give some of the knowledge back. Thank you so much.
Thank you. And to everyone listening, don't forget to subscribe. And as always, keep moving forward.